Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, April the 21st, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro and micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. We're not trying to cover our arses or hedge our bets. What we're doing is we're putting a plan in place for whatever the market might do. If, then that. If this happens, then we're looking for this to happen, and then we'll do that. And that is our trade plan, okay, that our hypo, which best suits what the market is actually doing. Trying to do that on the fly, okay, in the middle of trading is only going to cause you hesitation, okay, and missing trades or chasing trades. So we create four main hypotheses, two which we put the highest weight on, and then we look for continuation days as hypo 3 and hypo 4. Anyway, this room is a subscription room. If you're interested in checking it out, please send me an email at Quantum Leap Futures. There's no website, there's no blog. This is not a commercial venture. We do this live in the go-to each day during the pre-market session. Then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, let's take a look at the news. Earnings, again, very strong earnings pretty much across the board right now. Earnings season is, we're in the middle of it, and it's still looking pretty strong for the market. In terms of scheduled news, wrong screen. In terms of scheduled news, we did have Canadian CPI came out better than expected. Common CPI, median CPI, trim CPI, and core CPI were all a good news. Only thing we really have is we've got the Fed member Kashkari speaking at 9:30 right on the open. And where is he speaking? He's speaking at the Economic Development Symposium in St. Paul, and he is taking questions. So we gotta be careful on what he's saying during the course of his speech and through this question period. So I would give 35 to 40 minutes for that to settle out. 9:45, 15 minutes after the open, we've got the flash manufacturing services and PMI. And then at 10 o'clock will be the existing homes. And then we have the IMF meeting all day today. So we've got news, but it's not really scheduled. It's going to be spread out. So I would just, I always say this, and I hope people take it to heart, is it's Friday. And on Friday, what we like to do is we like to make our money early, and then we like to just tighten up or take the day off. If you're in a good week, and you're positive on the week and you get positive in the morning, okay, don't waste your bullets and go into a deficit as we go through the day. The last thing you want to do is go into the weekend with a loss or to ruin your week, and you have to chew on it all weekend. It's the worst feeling for a trader in the world. Okay, so let's take a look at yesterday. Yesterday, our main hypothesis was an open auction in range, a move down to the 36 to the 32 area. We were looking for responsive buyers to step in. Our hypo 3 was a failure to break out of value and get an open test drive, which we basically did get an open test drive. We tested the value area low and the value area high, and then the buyers finally stepped in. So we got a combination of hypo 1 and hypo 2. Hypo 1 main target was the naked VPOC at 46.25 and this 53 area. And then on hypo 3, we were looking for extension up to test the weekly ATR and up towards that 61. This was difficult to trade, because it looked like it was just going to be a rotational day, and then we got the breakout, and then there really wasn't any pullback that you could get in on. I got long at that 41, but stupid me, I closed the trade out at 46.50, thinking that, I get a rotation back down to the midpoint and get another shot at it. And what happens? They don't pull back at all, and it turned into a trend day for most of the day. And trend days are hard if you don't catch them early because there's nowhere to get in. So then you're taking scalps, counter trending against the day. I didn't have a bad day, but it was tough trading overall. Anyway, we created a double distribution day with a very big LVN. Okay, the LVN basically starts, up here at the 50-50 area. It goes all the way down to basically the 45 area. So if we do not hold this 50-50 area, maybe even looking at the 48 and looking at the Wednesday high at 49.25, we could come down and chop in here as we mature the auction inside of this LVN zone. When you see these big LVNs, this is unauctioned territory. So we blew right through it, and they're likely to come back and test it if they can't hold in the upper distribution. Our VPOC shifted up to 52.75. Our overnight VPOC is 54, and that 53.75, 54 area is one of the two microcomposite VPOCs in that upper distribution. But we'll get to that in just a couple of minutes. One of the things I like to do each day is I use my paper money account. It's got a live data feed because I've got a live account that I use on my other computer for options. And I use a simple candlestick chart, and I'm using the 9 EMA and the 20 SMA, and I'm looking for slope and separation. I start on the monthly, and what I'm doing is I'm looking for the strength of the trend through slope and separation, and I'm looking for where the trend is being challenged or where it could be challenged, and I'm looking for any candlestick patterns that jump out at me, or chart patterns. Monthly, very strong, multi-year trend, challenge at the end of 15, beginning of 16, they take it back in 16. We get this nice rising 3 pattern for continuation. We go up and we put a new all-time high. And so far, we've had one negative month. We are sitting just below the open of the month right now. Our open of the month is 57.50. They challenged it. They challenged it on the move yesterday, but they couldn't hold above it or maintain. But we do have strong slope and separation on the monthly, so the trend is still very much up. On the weekly, we were one time framing up. We violated the one time framing. Okay, so showed us some weakness. They tried to hold inside of that balance up here, and then they fell out of the balance on that Tuesday. They came down here and violated the trend, and then this week we're taking it back. So far we're back above the 9 and the 20, so we could see continuation, but the trend has been challenged, but they're taking it back. And going to the daily, on the daily, you can see that we're sitting right now. This black line here is the 20 SMA, and I've been watching this. I only added this to my chart when we broke below it, and this is a psychological number because it's the first time since the election day, which is all the way over here, that we actually have closed below the 20 SMA. So this is showing that there is some opposing force coming in, and we are seeing some weakness, but those buyers, can't keep a good SPOO down. Those buyers keep stepping in and defending. And so far right now, we're right at a decision point. We are above the 9 and the 20. We do not have slope and separation. We are in a sideways consolidation. we're right in this balance area, and we'll see it more clearly when we get to the composite. Moving to the intraday, you can see that we have had a big spike up. There is a FUBAR Mr. Sneaky on the 4 hour, and a move back to close the technical gap that was created on that move will take us down into that 49.50. And remember, I'm watching that 50-50 area because that's the start of the LVN that separates the two distribution zones from yesterday's RTH session. But right now, we're either going to see a continuation here. You can see that this is creating a flag, and just for the sake of the bigger picture, if we break out to the upside, here's the flagpole, here's the flag. If we measure this pattern right here, okay, I measure mine a little bit differently. I use the apex. Some people use the breakout point. Some people use the top of the flagpole, but I like to use all my measurements as conservative as possible, so I use the apex of the flag. And a flagpole measured move, if we hold and we break above, okay, is going to give us a measured move up into the 23.63.50 as primary and 23.69.67. And I think our weekly ATR is up there. Our daily ATR is up at 71, 23.71. So if we get a continuation day today, we could be seeing a move up into that 71. We've got range capabilities. We got range capabilities up there. Let me just get rid of all of this. But we do have a technical gap, so a move back down, is also possible, and that would violate the flag. Doesn't mean we can't go to 71, just means that the flag itself is a violated chart pattern. Remember, chart patterns are just patterns, okay, and they can get violated. Going to the 1 hour, but the trend itself is overall up on the 4 hour. Going to the 1 hour, you can see that again, flagpole, flag, consolidation. We're holding above the 9 and the 20 right now. We had a FUBAR Mr. Sneaky technical gap. We came down, closed the technical gap on the 1 hour and held so far, and we could get continuation, but we could get a break. If we break below the 53 area, then I'd be looking for the technical gap to get filled on the 4 hour. Going to the 30-minute, again, same thing, big, huge move. FUBAR Mr. Sneaky, rotation back down, okay, close the technical gap, and we go sideways. I'm telling you, gang, okay, and I hate preaching over and over and over again. If there's one candlestick pattern that you want to learn and pay attention to, okay, on every time frame and in most instruments, it goes across the board. Is the FUBAR Mr. Sneaky tech gap. It is not just a silly candlestick pattern that I developed. It is steeped in auction logic, and we can get into that conversation more if you guys want to talk about it during the course of the trading day in the regular trading room. But we are in sideways consolidation. We are challenging the trend on the 30-minute, but basically we're just going and consolidating right now on the 30-minute. Going to the 15-minute, same thing, just sideways chop all night long. And we've got just sideways consolidation. We are below the 9 and the 20, testing the 50. So we are seeing a little bit of weakness coming in right now. Again, it would be normal to see them pull back a bit and close that technical gap on the 4 hour. And on the 5-minute, you can see again consolidation, and we've broken below the 9 and the 20, and now we're breaking below the 50. And we are seeing some weakness coming in here. So take a look at it in the bigger picture structure. So let me just back up. I'm going to create a story for you to give you the context, right? All right. So we spent a lot of time down here. Okay, we consolidated, we get our breakout day. Okay, the last price that they accept before the breakout day is 22.62. They break up, they create the island top. We try to hold value up here at the 86 level. They can't. They gap back down. Where did they come to? They come to the last price that they accepted before the breakout. They accept that price. The buyers comes in. They create value higher outside of the value area, accept price around 73. Then they gap up into the island top. They accept that price again where they accepted on the first time. Okay, then we go into price discovery. Gap up, gap up, gap up. Create two-day balance at 23.19. Get continuation, accept value higher outside of this value area at the 38.50. Gap up again. Create this 5-day balance in around the 59. We're still in price discovery. They gap up. We get the blow off top. Put in the Mr. Sneaky on the full session day. Okay, they try to hold value for the 2 days at 82.50. They can't. They come back down. Where did they come back down to? They come back down into the 59.50. They chop around, create value higher, get another move up, come back up into the price where they tried to hold. They try to hold it for a couple days. They can't. It comes down. Then we get our breakdown day. And that was that Tuesday. We come down. Where do we come down to? We come right back down, okay, to the 3-day balance around the 38. We chop around there. We try to hold value. We can't. What do? They come back down to where it all started after the gap up day at 19. And then the buyers step in and we start working our way up. We chop around in the middle of the overall balance where we were holding the 2 days, and we're chopping between microcomposite VPOC to VPOC, but the sellers start stepping in at the 64.50. Okay, we can't get above and hold the value at 64.50. What happens? We fall out of value. We come down. We try to hold at the first level. We already had come down there before. Okay, they try to bounce a couple times, but they can't. They got to come down deeper to find value. What do? They come back down to that 19 area, find value a little bit higher, and then we come back up and we chop around in this area, creating a double distribution now on the longer time frame microcomposite, and then we accept value. If I move this day out, you can see that value was 39, and around the 38, 39, and then yesterday, what happens? They accept value in that chop that we were seeing in the beginning of the day in around the 41, 42 area. They accept value, value, the longer time frame value shifts up, and what do? We get our breakout day, and what do? They come right back up into this upper distribution, and the value up here that is centered around the overall microcomposite, the balance that we've been in since the gap up day of February 13th. And what are we doing? We're chopping around between the 59, it shifted down. It was 59. It is now 56.50. And this one right here that started on the breakdown day around the 53, and we're chopping around, and we talk about the fact that in this distribution zone we've got undetermined fair value between the 64.50, the 59.50, now the 56.50, and the 53.54 area. Okay, so we have to mature the auction here. If we're going to get continuation, we have to mature the auction and accept price higher yet again so that we can get continuation up into the 64. Then we have to now get into the 64.50 area, accept this value higher to get our move and continuation. Okay, and a move towards that unequalized high on the June contract of 98 and the unadjusted high at 24.01 from the March contract. That is simple auction logic. Okay, we're moving up and accepting value higher. Okay, we're moving down to find buyers and finding value so that we can continue the auction. If we can't hold above this 50-50, what do we have to do? we have to auction lower in order to find those buyers so that we can continue, okay, the auction. And if we don't find it, if we come back down right now and we don't find them again now at the 42 to 39 area, what's likely going to happen? It's going to have to come down lower. And I'm telling you, if we come back down to the 23 to the 19 area, we've been down there twice. 3 times is not a charm. We are likely to blow through it this time. They've exhausted the buyers, okay, when they have to come back down that 3rd time, and usually it means we've got to auction lower. And that would be the move that I'd be looking for if we can't hold the key line in the sand at the 28. 50-50 is going to be our over-under line today. And if we can get above the 70, then we've accepted value at the 64, and they're in price discovery up to find more sellers, and we get continuation of the auction. In between the 64 and the 50, expect chop. Okay? If we can't hold the 50, look for us to come down and chop between that 50 and that 45, 42 area as we fill in the shorter time frame, okay, price rejection that we had, the unfinished auction that we had. I hope that makes sense, because it looks complicated, but if you tell the story just like I did, okay, and that gives you the context, and it's all about the context. I think there was some conversation this morning about context. That's context. That's saying, okay, what has the market done? Okay, what is it trying to do, and how good of a job has it done, and what's it likely to do next? So overnight, what has it done? Well, overnight we opened up and they only put a low in at that 51 1/4, okay, and they chopped in the lower distribution around that 52.75. And they accepted that price, and they moved up, and now they're chopping around, okay, in the 54 in this distribution zone right here. So we expect a open auction in range and extreme rotations today on the open. And I'd be looking for a move down towards this 50-50 area, take out the overnight low, and see if we bounce off of the LVN. If we don't bounce off of the LVN, we're likely to come down here and chop, okay, for a good portion, probably through the midday, until one side takes control, and we either move back up into the upper distribution or we come down into the lower distribution. So moving our numbers over. Our overnight high is 56. Our overnight low is 51 1/4. It's a pretty tight range. They're accepting that value in the longer term balance zone. Our overnight VPOC is 54.75. And there's nothing else we can use. It's a pretty tight Gaussian distribution with the kurtosis around the 54. It's a little blunt right here, so we're likely to chop in this area coming into the RTH session. So let's start taking a look at our trade chart. Okay, I want you to pay attention to this number right here, 37.75. Our weekly open is 23.57.50. It's also our month open, but our week open, I'm sorry, I got that wrong. I'm going to have to make an adjustment here. Hold on a second. Our week open, I looked at last week's open when I did my homework, 23.24, and our daily ATR is running at 19.79. Oh, we're above critical mass. $43.79. So 43.79, okay, is our weekly critical mass. And we're not going to get to this one, so I don't have to worry about this. This is not down, this is up. Sorry, sometimes I'm human, I make mistakes. but I caught it. I looked at when I wrote it down. I looked at last week's open, which was 53 or 57.50. Okay, our week open was 23.24. Our daily average true range for the full session 20 period is running at 1979. That means that we have range capabilities today of 1980 on the full session. Currently, right now, our high on the overnight is 56. So taking off a full session daily ATR, our daily ATR takes us down here to the 36.25 on the downside, and on the upside, 71. We did test the weekly ATR yesterday. Our weekly ATR is up at 58. Our week low is down at that 22.75. Our weekly 20 period ATR is 35.86. A lot of numbers, but just let me put it into context for you. We have range capabilities today to go from 71 down to 36. If we get over the overnight high, our downside target will move up a little bit, but basically we've got range capabilities of going in two directions, one being 71, one being 36. Our week open is down to 23.24. So we only have 1 day left of trading. If they can't get below the 43.25, okay, sometime during the early session, then it's less likely or less probable that they're going to be able to go down to that open based on range capabilities and put in a negative week, which means that this week will most likely or most probably be a bullish or a positive week. And at some point in time, if we get and stay above the critical mass, the sellers could capitulate, leave, and the buyers can take control, and we can trend up, okay, into the close. And that's what critical mass is. I watched critical mass on the weekly, and then I watched next week will be very important because we'll be watching critical mass around that 57.50. This is our month open, not our week open, and that's what got me. That's what got me wrong. I didn't. It was last week's open. Yeah, or the week before, I should say. It was our month open. Anyway, so look at our levels. Well, our over-under line, we know where that's going to be. Okay, 50-50, just as it was yesterday. Can't type. Okay, and then if we get below there, I'm targeting, okay, the 47.75, and I'll be watching the 44.50, which was the IB low and the value area low from yesterday. And this is going to be a hard area to trade inside because it's going to be choppy. We don't hold the critical mass. I'm targeting the open from yesterday down here at the 41.25, okay, and looking for chop between 42 and 39. And then below the 37, then I'm looking for us to take out the daily downside ATR target, come down and targeting this naked close at 33.50, okay, and a push down down to this 27.50. Above, if we can get above the weekly ATR target and we can accept the breakout of the 58.25, then I'm looking for a move up into our 61. This should be 61, not 61.50. So I'll be putting a trade level here, and I'd be looking for a move up into the 63. This is 61. Well, basically 64.50, where those sellers started stepping in, and a break above that, I'm targeting the 67.75, and a move up to test that 71, that all-important 71 in the naked VPOC at 71.50, and then anything above 75, I'm looking for that move up into the equalizing of the highs up at the 98 and 2401. So what is my hypothesis? My main hypothesis is an open auction in range. I'm looking for a rotational open. So just be careful on the open. Okay, I'm looking for them to test the 50-50, find a false breakout below the 50-50 or reject the 50-50 and rotate up through, chop around at the month open and the range high from yesterday, and then push up through and chop, okay, between 64.50 and 58 area and just go sideways into the close. Maybe a late day probe up into the 68. But I'm not looking for a lot of expansion today. Hypo 2 is an open auction in range, a push up, a failure or a false breakout, and failure to hold the month open, rotate back down, chop around the 50-50 area, and then come down, okay, and get stuck and go sideways, okay, between the 51 and the 39 area, and just as we fill this auction in and go sideways into the close. My hypo 3 is a open test drive, okay, a move up to the VPOC, a move down to the 50-50. Buyers take control, take us right up into the 59-61 area, chop around here, and then get a continuation day and come up and close somewhere up here in the 68 to 71 area and get a continuation day up and a continuation of the auction towards those unequalized high, maybe even up into the 75. My hypo 4 is an open auction in range, failure to get above the month open, a complete breakdown, a move quickly through this this low volume area, chop around down in the 34, come down and chop between 42 and 37, and then get a flush into the end of the week and come back down towards this 19 area and close somewhere down here between 27.50 and 23.75, 23, or break this 22.75 week low. Those are my 4 main hypotheses. There's another 5th hypothesis, but I'm not going to get into it right now. We can talk about it, you know, on the fly if it sets up. And just taking a look at the gold. I know these sessions are getting so long. I got to articulate better. Gold still in this balance area. Everybody keeps telling me that gold is going to break down, but we're holding. Key thing to look at is value. Our microcomposite, okay, was up here at the 89, the microcomposite VPOC, and didn't shift 2 days ago. What happens? It's shifting now. So key line in sand, we were using the 83.30. This 81.60 now has to hold. We have to accept this price lower, and I'm going to be watching if we come up in this 89 area. I'm going to be watching for this microcomposite to shift up, okay, accept that value higher to get the continuation and the move into 1300. If we come down to the 81 and we do not hold the 81 and we get below the 77, then I start agreeing with everybody that we're going to get a bigger move down in gold. And I'd be looking for a move back towards. We have the 50% of the significant breakout candle. Let's take a look at that. That's going to be our main target. So the high on this was 77.40. And the low was 54.70. So our significant breakout candle, I'm just going to put a CHVN right there, the 50% return is going to be at 66.05. I won't bother labeling it. I know what it'll mean for me. So that's the return. That's the first target, okay, below the 75 is back down here. But I mean, right now, we're bouncing off of that 81 again, likely to see more chop and a slow grind back up towards this 89. And then we'll see if the sellers step in again. Anyway, that is a long session. I'm going to close this down. Trade well, trade safe, and we will catch you on the flip side.